settled in at before we move forward and get into our next conversation? While it started off in the green, let's just see where the Nifty is currently at, because we're doing quite okay, one would have to say. About 0.7% of a move higher, 180 points up in the green is where we're currently at. Policy Bazaar, Paytm, Amber, Indian Bank, Union Bank, these are your winners. And on the flip side, there's weakness in a Cipla, ONGC, AU SFB, of course, is down about 6%. UPL is down nearly 10%. And IDFC First as well, locked lower by a good 10% as we speak right now. But let me now welcome on board Mr. R.S. Raja Gopal Sastry, the Group CFO at Endurance Technologies, joining in on the show right now. Mr. Sastry, great to have you today on ET Now. Tell me, how is it that you see the proposed India-EU FTA influencing your export competitiveness, your localization strategy, and of course, margins across both geographies too?
We are typically a local for local player as of now. So we do have facilities in Europe with about 15 factories in Italy and Germany. Now, this does give us interesting possibilities. We are studying it very closely. We have very strong product synergies, which we can achieve if we do some better, different kind of planning. So we are studying it, but overall we see as a sentiment, it's a very good positive. And as a possibility of improving our businesses, intra-continental businesses, I think it's also augurs well. So we are looking at it very positive.
Mr. Raja, hi, this is Harsh here. I'm trying to get a sense of whether the tilt in terms of sales changes as a result of India-EU coming into play, right? You're currently at around 25 to 30% in terms of the EU geography, if I'm not wrong. Correct me if I'm wrong. Yep. Does that change substantially as a result of this, say in 3 years from now?
So if you see this 25 to 30% of the sales in Europe is produced in Europe and sold in Europe. So that is, and we are looking at various opportunities to expand within Europe also, either through new order wins or expanding our footprint also. So that initiatives will continue. Now, will there be exports from India into Europe and same from Europe into India in terms of technology? This is something which we are studying, and going forward, obviously, with all the OEMs in Europe also looking at adding more geographies to de-risk their own supply chains, we do see a significant possibility. So we are studying it very closely to look at which is the most cost-effective and mutually beneficial for the Indian operations and our European operations. And then there will be some changes, sure enough.
So for the moment, it's not quantifiable, is it, Mr. Raja? Is that the right way to think of this? So we're not able to quantify.
We have not firmed the plans. We are just on the, we are sitting on the drawing board as far as the plans are concerned. So I would say that right now they're not quantifiable, but they do present very strong possibilities.
And Mr. Raja, what happens if at all you become open to exporting to Europe? Would your margin expectations be in around the 18% number? Because that's the margin you've clocked in Q3 for your European business. Is that the benchmark, or given that it's export centric and maybe the IRRs coming out of India are better, how's the best way to think of this?
The best way to think of this 18% which our European operations clocked were produced in Europe and sold in Europe. But you also should notice that based on our past announcements and where we are today, we are also winning businesses in the Europe and the USA. These are significantly of better margins. So they would improve the margins of the India business, the India standalone entity, coming from the export, and thereby improving the margin performance of the Indian operations. The European operations as of now will continue in the same vein as they are in, getting the 17-18% margins, and they're also expanding to get more market and more business. Yes, if there is a possibility that the supply chain of Europe could be expanded to India, that is, we supply into Europe and the European entities are selling into the customers, this could be definitely a plus for the margins because of the better cost structure we enjoy here.
So give us some color on how the domestic business, though, is panning out right now.
See, the macros of domestic business are very strong. So if we are predominantly in the two-wheeler market and the three-wheeler market, 18.3% in Q3, and in January, 37.3% growth. 29% growth in the two-wheeler business. Three-wheeler also has been such a very strong performance. Four-wheelers, where we supply castings today, and we aspire to supply suspensions, brakes, and we already have one orders. We have one orders for some drive shafts also. Even that is performing well. The demand side impetus which the government has put in place is showing very positive effect. Now, as far as endurance is concerned, from a micro perspective, we are getting the right of first refusal, or rather, we are being nominated for all the new businesses of all these OEMs, and we have been winning orders. Our order win rates have been good because the ability to turn around an idea or a concept into a product and give back because of a well-invested R&D is much better. So we are very positive about how our India business is evolving, and that's visible in the order pipeline and the RFQ pipeline which we have, and also the investments which are likely to come on stream and start producing in the upcoming quarters. We already have gone on stream with our new alloy wheel plant in Bidkin.
Okay. And talk to us about the regulatory landscape as well, especially with regard to ABS. How is that progressing? You're expecting the timelines to be maintained, and therefore, what do you expect in terms of order traction domestically?
In terms of ABS, we are ready, if the regulation comes in, to supply to the demand which we have targeted. The regulation, as far as the government is concerned, we have not seen an announcement, and we have not seen any official news about how it would progress. However, the way we are progressing in our approach with the OEMs, and which we are seeing actually traction there, is that ABS being a very highly important safety addition to the two-wheelers, we are going ahead and implementing this to quite a lot of OEMs who are upgrading their vehicles. And along with the ABS, we also need the hydraulic braking systems and disc brake systems. We are also enhancing our capacities there, and we are continuing to offer this as a solution to the OEMs, and we are seeing traction there. Come regulation or no regulation, we do see that ABS and the hydraulic braking system and the disc brake systems would anyway find a growth. ABS would accelerate this growth. So that is what we are looking at. So we are ready for the regulation as it comes, but we are also waiting to see how the government would announce and if there would be an official announcement in this. As of now, there is no official news from the government on this.
Interesting. Okay, Mr. Sethi, great to have you today on the show. Thank you so much for your time.
Thank you. I should thank you.
Okay, let's take a very quick break. The markets are looking stable. I think there's been a block deal on IDFC, and that's seeing some more weakness come in, some stability coming in for AU Bank, though that's recovered a little bit from the day's lows. But we'll track all of that after this very short break.